All right. We're back without Wilbur, but we've got a special guest today.
A little quieter in the office this week.
It's like we're going out. I feel like we're going out of business when he's not here. Like, what is going on? Like, it is way too quiet. So yeah, definitely a lot quieter. So, anyways, special guest is Zach Splutter. I guess real estate director for T-Mobile. Is that the title? I don't know your title.
Yeah, titles are a little interchangeable, but no, senior real estate manager for T-Mobile, right up here in the.
Should we bump it up while we're on here? And
I think we should do that.
If it sticks.
I think we should.
Senior vice president of T-Mobile Real Estate.
I like that. I'm going to stick with that.
It's got a good ring to it.
Yeah. So, anyways, give us a little background, man.
Yeah. I appreciate you guys having me on today. Yeah. I actually got my career kicked off in real estate doing brokerage for NAI Robert Lynn. Yep. And then I left there and I went over to FedEx and was doing real estate development on the FedEx office side for, 7-8 years, something like that.
Yeah.
Left and came over to T-Mobile about 5 years ago. And Rob and I have been just crushing it left and right for the last 4 or 5 years. And here we are having a good time. I appreciate you guys having me on.
Yeah. That's awesome. No, yeah, you and Rob have done, how many deals have y'all done together?
It's been a lot. Probably over 100.
I was going to say 3 digits for sure.
Yeah. I think, it was 2 years ago. We did 26 in 1 year.
Wow.
And so we had a good run. And at the time, T-Mobile was programmed going after small towns. So Zach and I had a lot of windshield time together, driving around East Texas, West Texas. Too much time. North Texas, going to small towns and a lot of barbecue. And we had a good run. And then, it's been kind of steady since then of 6 to 8, 10 deals a year.
Yeah.
Yeah. So T-Mobile's been a client of mine for 17 years now, since day one at JLO.
Oh, okay.
So I think we, added it all up at one time. And I think it's, well over 550 T-Mobile deals.
Wow.
Yeah. So it's been a great account for me and a lot of fun when you end up with a close friend on the team. It makes it that much easier.
Yeah.
So it's been a blast.
Yeah. People call me saying I'm the T-Mobile guy for Texas. And I go, now just call Rob. What's the answer to this? I don't know. Just call Rob.
It's rare that there's a store that Zach is dealing with in Texas that I haven't touched at some point in time.
Yeah.
Whether that's a renewal, an expansion, a relo, and the deal itself, all of the above. So it's been a lot of fun.
You get to do renewals. You don't get pushed out by the landlord.
We do on a lot of those.
Yeah.
From time to time, Zach is great. He'll engage me, especially on a renewal, an expansion, or a blend and extend. And so those, it's a little bit easier to get involved in that transaction.
Yeah.
Zach, can you touch on just kind of what you guys are looking at T-Mobile? Is any freestanding, all kind of multi-tenant deals, and kind of what the strategy or plan is for this year or next? Or
yeah, we do a little bit of everything. We prefer what I call the sexy real estate. The cell phone industry is crazy competitive, and so like you have the banks that are always competing for that A+ real estate on the hard corner. All three, T-Mobile, Verizon, and AT&T, are doing the same thing.
Yeah.
So if we can take over a freestanding spot or build a freestanding spot, we'll 100% do it.
Mm-hmm.
But we do a little bit of everything. It kind of is market dependent.
Right.
And then long-term strategy-wise, Rob kind of touched on it a little bit. We grew really, really fast over 2020, 2021 to 2024. We opened 600 locations in only small towns in America.
Mm-hmm.
It was fun. It was wild. And we've finally hit that goal. We've tapered off on that a bit. And now everything is more focused on what I'll call like a top 100 major metropolitan area where we're looking at doing a priority relocation, maybe an expansion that he mentioned. And we still are doing lots of suburban infill and things like that across the country as well. So we're staying steady.
Nice.
Yeah.
Rob, do you work yourself into your commission agreement on the renewals on the small town owner? Because like
we definitely tried. We definitely tried, and that was taken out very quickly on a lot of those. But we've had a couple that have gone through. But the small town, I mean, that commission may only be $6,000 or $8,000 out of the gate, especially if we're doing a 3 or 5 year deal. Yeah. Some of those, obviously, we push the term up a little bit, but the shorter term deals, smaller space, smaller town, it was a volume game,
Yeah.
and we were definitely going out asking for, trying to get a piece of the renewal when it came around.
Yeah. So when I moved to Prosper, I had T-Mobile.
Okay.
But at the time, reception was it was terrible.
Terrible.
So I moved to AT&T, but I'm back.
Hey,
my man.
Let's go.
Yeah.
Let's go.
My
They're
man.
actually better than AT&T now out there.
Yes.
So, and free Wi-Fi on American Airlines flights.
That's right.
So,
And now there's a connection with Starlink and T-Mobile as well.
Yep. Starlink, you can go anywhere that you don't have cell coverage and it'll get picked up by the satellite and no charge to your account. It's kind of sweet.
Hey, now.
it's like bags fly free.
There was something nice where our place up in Broken Bow used to be, we had no cell phone coverage up there. So unless you were on Wi-Fi, you were out of coverage. And that was kind of peaceful and nice. And it was like, oh, I'm so sorry. I was out of town and had zero coverage.
Yeah.
But now
I got
you're
that excuse
constantly
all the time. I don't understand.
Aren't you the T-Mobile guy? They have 100% coverage.
Yeah,
No
it
excuses.
doesn't work anymore. That's right. Now we're always connected all the time.
Yeah. So, well, that's cool. So y'all rolling out. Y'all doing. So y'all slowed down to how many sites a year now? You think you're doing?
Yeah, it's a little fluid. I mean, we're shooting somewhere between like 50 and 60 new stores a year, and that could be a mix of.
Is that just Texas?
No, it's slowed down. Maybe, we're probably maybe 100, 100 and a quarter nationwide.
Nationwide.
Yeah. I was kind of thinking more on my own geography, but
Yeah.
maybe 100, 100 and a quarter.
So you cover outside of Texas too, right? So what's your sandbox?
If you took Texas and kind of just blew it up a little bit with a bowling ball or a beach ball or whatever, that's me. So I go over to Arizona, kind of come over to Colorado, and then I stop at Louisiana.
Yeah.
Yeah, so South Central, whatever you want to call that.
The old Southwest Airlines states, the ride amendment.
Yeah.
Right.
Yeah.
That's cool.
But it's been good. They're doing some optimization now where, you had a couple smaller stores that maybe now we're integrating into one larger store. And so having more of a flagship mentality. So that's been fun. We've had some repositioning exercises that have turned out well.
And do y'all always try to have an out parcel like in a thing? Is that more desirable, or are you in a multi-tenant site? Or
If you're talking to me, it's an out parcel.
yeah,
Rob always says I have an expensive appetite for real estate.
Champagne taste and a beer budget.
Yeah.
I will say our budget isn't so much beer anymore. It's somewhere in
gotten a lot better.
between.
Yes.
Maybe it's not water beer anymore. It's maybe a craft beer.
There you go. That's right.
But yeah. If we can be in an out parcel and the real estate quality is excellent, we'll go for it. Yeah.
And what's y'all's typical footprint that y'all take?
Yeah, 2,800 to 3,500 square feet is the sweet spot.
Yeah. What? How many new sites are you opening in Frisco? Is Frisco still, or like north of 121?
North of 121. Yeah, we're working on. We just opened up 380 in Hollyhock, or 423 and 380.
Yeah.
We're a little behind the 8 ball on that one. We got that one open 2 years ago.
Yeah. It's okay. No one can get to it.
No joke. No joke. It's nuts.
But it's doing great.
Yes, it is actually.
Yeah, that store's crushing it.
Yeah.
And then we've got Gates of Prosper, and Frisco is pretty well built out after that 380 and 423 site.
Yeah.
Yep. Yeah, and we've got a lease signed in Salina. So we're working on that one is a multi-tenant end cap up there. And then we've got a few others that I'm not going to name at the moment. But yeah, we got some stuff moving and shaking.
That's cool.
Yeah.
It's been good.
It's all happening up there.
It is. Yeah, center of the universe.
Are there certain tenants you guys like to coexist with if you go in this multi-tenant, or just kind of there's a kind of litany of tenants at work?
Yeah, it's more so we have a list of tenants we don't want to be associated with, right?
Yeah.
Like we don't want to be associated with.
Hustler Hollywood.
Yeah, absolutely not that. Rob's Flower Shop, vape shops, things of that nature. But any of the big national brands that are around, we really don't have any problem mixing and mingling with them. So
Nice.
Well, the vape shop could be a good place to be next to, because those guys might have 2 cell phones.
yeah, get you a burner and a postpaid one. Yeah, that's a good point. Yeah.
So
we have fought over that prohibited use countless times. Countless times.
Yeah, it's an optics thing more than anything.
Yeah.
I'll just give you something wild on insurance on that. We had a marijuana tenant in one of our buildings in Oklahoma City.
Yeah.
I'm talking about like a 6,000 foot space.
Mhm.
And
it's a grow operation?
it was a grow.
Yeah.
And when I got rid of them, my insurance went down $45,000 a year.
Ooh.
Wow.
I was like, I am no more like, and then and theoretically the lease tells you can pass on whatever their use in insurance.
Yeah.
But I mean, like,
Right.
I would have given that to the guy. He'd have been like,
What?
I probably should have given it to him. Then he would have left.
Yeah.
And then, but I got out. What was funny is because the buyer that bought it off of us paid all cash. And so they weren't like, there wasn't a bank like pressuring them for insurance to fund. Right. And so they got up to closing and they go, hey, can you keep your insurance on the building for a couple of days? I was like, hell no. I don't think they could get insurance.
Oh, wow.
So I was like, not my problem. Sorry.
Yeah.
I'm out.
That's interesting. I have to keep my ear to the ground for that if we have a co-tenant like that.
Yeah.
come in any of our centers.
Well, because it could,
It'll increase your pass-throughs.
It'll increase your pass-throughs. And then like, how's your, is the landlord really allocating that to one guy, So
I'd be really upset if I was a co-tenant. And all of a sudden that's getting, split up. However,
it's
usually gets
it's a real thing.
And that was likely because it was a grow operation, not a retail space.
Yeah, but what's what I understood as the perceived fear was the threat of robbery.
Oh, okay.
It wasn't we're talking about a bunch of flowers.
Flowers, yeah.
We're talking about a florist.
Right.
And but the perceived threat is, now you're not going to see this in Texas, right?
Yeah.
But the perceived threat in somewhere where it's legal is that everybody's carrying cash.
Right.
So there's a higher likelihood of theft.
Yeah.
And break-ins. So they shoot it up through the roof. And like, what are you going to do? Like, you want to be in the weed business, what it costs,
Yeah.
So no more marijuana tenants for me. So
were y'all able to get financing? Did y'all have financing on that?
Yes. It was interesting. I had another marijuana building up there, and they actually had a bank account, and the bank that banked them wouldn't loan money on the building.
Wow.
I was like,
Red flag.
So, but I found a bank up there that was comfortable with it and did it. So, but it reflected in the rate, and so it's a challenge.
Yeah.
It's a challenge I don't need. I'm like, I don't need this. Like, so, but yeah, your states where it's legal, like, I'd be looking at them pass-throughs because the insurance rates are probably pretty out of whack if they have a dispensary in the strip center with you. So,
well, yeah, need to go re-review our CAM reconciliation language and what they can and can't pass through.
Call Rob. Rob would love to do that.
There's got to be an AI tool for that. I can leverage something.
Well, after you go to your dispensary and roll your get your pre-roll on, you probably get hungry, which leads us to our show sponsor, Chipotle.
Is that check cleared yet? Are we still waiting for it?
The lawyers are working it out. Yeah, we're getting there.
It's a long time for gift cards.
Yeah, and, publicly traded companies, they take a lot. They move real slow. So
we want to jump into it.
Let's jump into it. What do you got?
I'm going to actually start with Starbucks. We'll get to our sponsor here in a minute.
Okay.
So, really not a whole lot changed, from last month to this month, just kind of looking at the numbers. There are, on the Starbucks on market currently, the kind of high price point is right around 6.9, which was consistent with the prior month. Median is just under 3 million. Low price points about 1.3. Cap rates still pretty consistent with last month. Not a lot of change. 7 cap at the high end. Median's right around 6, which is where it was last month. And then there's a low cap rate of like 3.2 out in California. And then there's 154 on market, kind of the way we track them, kind of longer term, 8+ years remaining. There were 52 last month. So there were 20 that sold last month, but there was another 22 that came on market. So a little bit more inventory. I think we'll see that subside. I just don't know if that's later next year. There's still a number of assets that are still coming online, but I think with some of their focus being, sounds like with the new CEO on existing stores, I think that'll taper off a little bit. And really what we need to have happen for probably Starbucks and a lot of their developers, hoping those cap rates drop, but they're still elevated and, still in that 6 cap range.
Yeah, we just funded a 3-pad site in Greenville, South Carolina, and it had our sponsor in one pad, and then one of the pads developers flipping out of, and the third pad, it was getting fought over between Starbucks and Dutch Brothers. And I was like, please be Dutch. Please be Dutch. So we ended up getting Dutch on it. So.
Yeah, unfortunately, it's a pretty easy, as long as both want it, it's a pretty easy decision. And I think we've talked about it on here before, and even with some of the Starbucks folks that we know, just, hey, if you guys will, right now, Dutch is just it's a 15-year deal, and it's true triple net, and that's just where the investor wants to go. And as great a brand as Starbucks is, and credit and everything else, even with them, having a little bit of trouble with the stock, and it's still a great brand, and I think investors love it, but they don't love that lease structure. So, it's kind of an easy decision right now. And if you've got somebody like that, we've talked about it, and they should trade more like our sponsor.
Yeah.
So we'll kind of talk about them real quick. So Chipotle, that one is pretty consistent. All these are kind of pretty consistent. Like we haven't seen big fluctuations in any of these. So with Chipotle, kind of the high price point on these is about just over $5.5 million. $3.5 million is kind of the median, and then there's some an older deal that's longer term lease that's just right around $2.3 million. Cap rates last month, the high was 5.75. I think there was an outlier. Now it's back down to 5.5 as far as the high cap. The median is right around a 5. It's at like 4.98. And then the low is a 4 cap out in California. So pretty consistent with what we saw last month. There was, I think, an outlier last month. So it was, the high was out there a little bit up there. Inventory level, pretty consistent. There was 50 on market last month. This month there's 53. So 7 sold, and then there was another 10 that came on market. So inventory's up a little bit, but that number is not crazy. And Chipotle still, because their lease structure and everything else, still in really high demand. Yeah. Investors really like it, especially if it's got that drive-through or Chipotle on there. So we're seeing them be pretty consistent.
And their CEO was like, we're going to open a store a day.
Yeah.
Golly.
Yeah. They're going to crank it up.
Pretty aggressive growth pattern.
And then 7-Eleven. So again, no big changes here. There's a large price point truck stop site. It's a little over 14 million. That's the high price. Median is about 8.3. That bumped up slightly. I think 8.1 million last month. As these new sites come online, they're doing more and more of these truck stop sites. So those are just bigger price points, bigger footprint. Everything's, more gas equipment. So they're just more expensive.
Where are those mostly?
As far as states or interstate, they're doing a lot. I think any of the growth markets, whether it's Texas, Florida, the Carolinas, Arizona, they're looking to expand in, with their cover pretty much the entire country at this point. So they're looking at these. I think if you look at just the C-store market overall, whether it's Circle K or Quick Trip or 7-Eleven or any of these larger brands, they're doing more and more of these larger footprint truck stop sites. Right. I think just because gas volumes are bigger, the margins are bigger, they get that customer that comes inside, spends dollars inside the site. So you see a trend with more and more of that happening.
Yeah. Is this the Buc-ee's effect?
I think these guys are more capturing the truck driver.
They want the truckers.
Yeah. Okay. And Buc-ee's
the trucks aren't even allowed.
Yeah. The Buc-ee's effect is really phenomenal because they continue to expand. We've got a client that's doing a site in Madisonville, just north of Houston on I-45, and Buc-ee's is there. And he was just telling us, hey, we went by there and it was just jammed up. We think, Starbucks is going to do great. What's interesting is when we were looking at this deal, we know one of the guys at Shell who's on the west, Buc-ee's is on the east side of 45. Right.
Yeah.
The Shell station's on the west side. And I talked to him. I'm like, hey, did you guys just get crushed when Buc-ee's went in? He goes, no. He goes, it was kind of crazy, but our volumes went up just because I think that maybe it's the locals or whoever doesn't want to deal with all the headache of Buc-ee's, but he said their volumes went up. It generated more traffic at the intersection.
Yeah.
And so everybody at the intersection has done better. So it's pretty crazy.
Yeah, I think, you might have pulled off the freeway. You see the line to turn into Buc-ee's and you're like, yeah, we'll just run to this.
Yeah. All the gas pumps are full and people are waiting. It's pretty phenomenal.
That Starbucks was the Jack in the Box that I presented to Zach in Madisonville.
Oh, is that
right?
Long time ago.
Nice.
That's when it was a beer budget.
That's right. We took a client to Buc-ee's. They were in town from California yesterday. We were on tour all day. And the Buc-ee's effect with out-of-towners is fantastic.
Yeah.
It's like literally kids in a candy store. Yeah. I mean, we spent 30 minutes there.
Everything's bigger in Texas.
Everything's bigger in Texas. It just blows people's mind. They're like, what is happening right now? Where are we?
Which one did you go to?
We were in Denton.
Okay.
Yeah, the South Denton site. And so we walked in and everybody leaves with jerky and gummy bears and drinks and, the whole thing. It's such a great experience as a broker. It's a great way to kind of break up the day. And it's almost like a entertainment for 20 minutes just to see these guys walking around the store.
Yeah. It's pretty crazy. We had someone from Buc-ee's, one of our guys out of Houston has a relationship with them. And so they filmed and then we're presenting it to a larger group. But it was pretty incredible to listen to them talk about how they go look at real estate. What I was kind of blown away with was that they weren't afraid if there wasn't an on and off ramp off the freeway. They were looking at great sites, good cross streets, obviously, or farm to market roads or whatever, a state highway. It's on a major interstate. But they would go work with, the state municipalities on off ramps and on ramps and everything. I was like, that's pretty wild.
Yeah.
But you go look at all the new sites they open, and it just seems like they get bigger and bigger and more pumps. And it's pretty amazing.
We always joked, imagine going to the bank, for the first Buc-ee's and trying to get a loan. And you're telling the banker, I got a great idea.
Right.
We're going to do a gas station and it's 120,000 square feet.
They're
and
like,
we're not going to allow semis.
Store?
We're not going to allow semis. It's just going to be, vehicle traffic. And we're going to sell gummy bears and jerky and T-shirts. And we're going to have a big, golden beaver out front.
This beaver's our mascot.
Yeah. The banker's like, what are you talking about?
Yeah.
Okay. So a golden beaver.
Golden beaver. That's the key to success. That's all you need.
It's undefeated.
I'm not going to touch that one.
Smart. Can we get back to 7-Eleven?
Yeah. So back to those truck sides.
So they're bigger price points for sure. But as far as on market, that's pretty consistent. There's 66 currently on market, longer term deals. There were 65 last month. So 6 sold, 7 new ones this month. So pretty consistent, kind of like those other brands. I think the other thing that we usually talk about and are looking at is just the 10-year and what's going on in that. Is that having an effect? Right now, today, I think earlier when I looked, the 10-year was at 4.22%. Last month, if you look back, the high was 4.5%. The median for the month was right around 4.4%, and I think the low was 4.26%. So it's or at least lower than the low last month, but I think still a lot of work to be done. I think everybody's focused on the Fed. Obviously, they haven't moved rates in a little bit. Everybody's projecting what's going to happen next meeting. And, if you go read everything out there, it's kind of confusing a little bit because it's like one time you read, jobs reports, not very good. And then there's a lot of positive momentum and another something that's getting released. And so, it's just in listening to the Fed and what they want to do, it's kind of hard to read what's going to happen. I think if you look at one thing we do track, and I'll just to say this real quick, is the CME group puts out kind of their projections and they track it. And at least right now, they show like a 93+% chance that they're going to drop rates at the next Fed meeting in September by 25 basis points.
25. So the one thing, so we're brokering a debt deal for somebody right now, and they're like, "Hey, why don't we just wait till the Fed lowers rates?" And I was like, "Yes,
yeah,
but a lot of these bank rates are typically tied to the 5-year and the 10-year, and when they lowered rates the first time, that shit went up.
Yeah,
so like it's not a 1-for-1 correlation when they lower Fed funds rate, but I mean theoretically it should start backing off, right? Because money will flow to alternative assets because cost of capital is cheaper. But it's it's still it's not a silver bullet that it unlocks.
It's not. I think you nailed it. Like I was, just because they lower, I'm really not optimistic that the 10 years, going to come down.
Yeah.
And even if it does get down around 4, that'd be great. But if most of these assets that we're looking at and talking about, a lot of them are investment grade and you can get debt and it's attractive for considering other options, but it's still low 6s. And so you're buying these assets at a lower cap rate because that's where they're still trading and it's just all negative leverage. So it really is hard to kind of get momentum going and get enough transactions where you start seeing more buyers, more 1031 exchange buyers in the market. And so it's still, I think that's exactly right. The 10-year need to come down.
Do you, well, you have the big, beautiful bill now. So you probably don't have enough, but it's back. 100% depreciation is back. But you probably haven't had enough. We haven't had enough time yet to see if that's really ramped. Have you all seen an uptick?
It's pretty crazy. As soon as, that got signed on, I think it was the 4th of July.
Yeah.
I think he waited to sign it on the 4th. And it was pretty interesting talking to a number of clients and just, especially the big price point 7-Elevens and other C-stores, just kind of slower because of where interest rates are. As soon as that passed, we almost immediately saw an uptick in activity and offers being written. So there were, I think that did create some calm in the market a little bit as far as some of those potential buyers being on the sidelines saying, I'm going to wait and see what happens. So it still hasn't, I don't know that we've seen enough things transact yet, but activity wise, it did help.
It's good.
Yeah.
Did you see they're going to have a UFC at the White House?
That's July 4th, right? Next year?
I think next year.
Yeah. On the lawn.
And
the UFC fight.
President Trump's going to get in that motorcycle that President Camacho had, and what was that movie? Oh my gosh!
Is this part real?
No,
I know that.
No. The first part was
I know,
UFC
I
on
saw
the lawn.
That.
That is legit.
I saw that.
Why can't I think of the name of the movie? The Brondo energy drink, where everybody's stupid in the Idiocracy. They're the president driving. Kid
amazing.
Rock's gonna be out front, just
jamming out.
Yeah, that'd be kind of cool.
Yeah, Rogan confirmed it the other day.
Yeah.
I was listening to one.
Yeah.
It's wild.
Maybe
payback. He's getting some benefit.
It might be Trump and Powell in there, and he's just beating them up for rate cuts.
Powell will be long gone, I think, by then.
Yeah.
He's hanging on by a string.
Yeah.
He's, I don't know if he's got 6 months, 8 months. It's not. I don't think he's going anywhere, and I don't think anything happens before that, but yeah, he's not getting extended.
He and Micah are not getting extended, apparently. I don't know.
Yeah. Oh, man. This is so funny. He goes, there's a guy that runs a family office out of Germany, and we've become friends, and he was in town. He's like, hey, I want to meet you. So we went to Cowboys Club this morning for breakfast. He goes, who's y'all's best player? I go, I don't know right now. It's very up in the air.
He's on the sidelines.
Yeah, he's in sweatpants on the sideline.
Yeah.
He is not practicing on the sidelines. Yeah.
So, well, yeah, no, I haven't seen bonus depreciation really help our side of things, but it's. I would imagine that I'm glad to hear that people are starting to do more there. It'll be interesting as over the next couple months to kind of see if sales will pick up and kind of.
I think they will. I think we'll see some big buyers come into the market that'll clear some inventory, and we'll see if that happens. Then we'll see it get more competitive. But a lot of investors are still chasing yield. We were talking to a group that wanted to buy for bonus. And ultimately, they ended up kind of going the route of car washes, because car washes have a big bonus benefit, kind of like C-stores that qualify. But I just told them, kind of buyer beware, be careful. Like, there's been a lot of consolidation in that market, a lot of PE-backed stuff. I need Will here to give us his opinion about the PE stuff. But a lot of consolidation, and so some of those guys are selling off. They've definitely slowed down. They got oversaturated a little bit, but it's attractive because you can get the bonus and then the yields are higher, but you got to be a little careful with some of those.
Yeah. Well, Clark Kent, you got your glasses on.
I got my glasses on so I can read the fine print over here. We got a couple good things that just came out. So the QSR 50, the annual rankings of limited service restaurants in the U.S. just came out. So we'll kind of run through some of the top ones that are interesting. McDonald's with 13,559 units. Average sales volume of $4 million per store.
Wow.
So you're up to $54 billion in system-wide sales.
The ranking is total revenue. Is that what
That's right. Yeah. So they've got it calculated two different ways. One is total revenue, system-wide sales. Two is sales per store average.
Okay.
So we'll touch on both of those. So we'll start with system-wide sales. McDonald's, 1, as you would expect. Number 2, Starbucks at 30. You've got Chick-fil-A. By the way, Starbucks.
Wait, Starbucks at 30,000 locations?
No. My bad. They're at 17,000 locations.
Okay.
1.8 million. Average sales volume.
Okay.
Yep. So you're at $30 billion in sales.
Is that a month or a year?
Annual.
Yeah.
It seems like Starbucks would rip way more than 1.8 million.
Well, they've got a bunch of that's kind of overall.
Yeah, so I know it's overall.
If you just took out their downtown and kind of cafe stores and just did drive-thrus, it'd be a bigger number.
Oh, okay.
Yeah.
I think if you took out those small town markets that they really were trying to get additional market share in, if you took those out, it would juice that number up a bit too.
Number 3, Chick-fil-A. So 3,100 stores, averaging 7.5 million.
They got to be number one in top store sales.
They are number one in average sales volume per store. So you've got
they're not even open one day of the week.
That's right. That's right.
It's pretty amazing.
Yeah.
What a story, man.
Yeah.
It's so great. Number 4, Taco Bell, 7,600 locations, averaging 2.1 million a store, system-wide sales of 16.2.
That's pretty
impressive.
A lot of tacos.
That's a lot of tacos. Number 5, Wendy's, 5,900 units, averaging just over 2 million per. So they're at 12.5 in system-wide sales. Dunkin', you've got 9,700 locations, averaging 1.3 per store. Total system-wide sales of 12.4. Chipotle, number 7 on the list. You've got 3,600 locations, averaging 3.2 per location for 11.1 in system-wide sales. Number 8, Burger King. They've got 6,700 locations, averaging 1.6 for total system-wide sales of 10.9 And then Subway's number 9, 19,500 locations.
Wow.
Averaging 500,000 per store. So just a sheer volume game there. With 9.6 in system-wide sales. And then finally, we'll close out the top 10 with Domino's, 7,000 locations, averaging 1.3 with 9.5 in system-wide sales. So I thought that was pretty interesting. You've got some guys a little further down the list that are starting to climb, some big names. So In-N-Out Burger, you've got them at 5.2 in average store sales. They're number 30 on the list. And they're
how many total locations are they?
They are, let's see. In-N-Out is 415. Yeah.
On the expansion track, though,
they are. We talked about that the other day.
The owner's moving. She got a lot of flack. Well, she's moving to Franklin, Tennessee.
To Nashville, yeah.
Franklin.
Yeah.
It's like Highland Park.
Yeah.
It's the Highland Park of Nashville.
Lower those taxes.
That's right.
Yeah.
Yeah. So now let's talk about average sales, the highest AUV. So Chick-fil-A, obviously, number 1, 7.5. Cane's number 2 at 6.5. In-N-Out, 5.2 at number 3. Whataburger, averaging just over $4 million per location. McDonald's right behind Whataburger. Shake Shack right there at 3.9. Culver's at 3.7. Chipotle, 3.2. Cava, impressive at 2.9. Zaxby's at 2.8. Panera at 2.6. And then Panda Express at 2.5. So,
wow.
Yeah.
Cava's making a push. Like I didn't know they'd be in the top 10.
Yeah, 367 locations for Cava.
Mm-hmm.
It appears they added 58 locations last year. So
they've been pretty busy.
They have been. Yeah, they're a great operator.
I like their food.
Yeah. And that was, a successful merger with Zoe's. When you think back to those two brands becoming one, that doesn't always go according to plan.
Right. Yeah.
Right. So those two merged and kept charging ahead, and nobody even talks about Zoe's anymore. But that was a great acquisition that fueled that growth.
Yeah. And they changed. I mean, they adopted the Cava, brand and the way they just the whole lineup, kind of a more Chipotle style, move through the line and build your bowl.
That's right.
So I do too. I like it. From an investment standpoint, they're kind of in the Starbucks category because they are usually 10-year double net. Landlord's got roof and structure. So they're as great a brand as they are. They're a little tougher on the sales side.
Yeah. So thought that was great. Couple other highlights that we'll run through. So Boot Barn, it continues to be successful. Their sales were up 19% last quarter.
Wow.
Yeah. So they've lifted their guidance for the year and continue their expansion. Multiple stores that, are in process right now. We're seeing them on a bunch of site plans. I think it's a great use for centers and brings a good.
They're usually a pretty big footprint too.
They are. Yeah. Those are big stores. I think they're, upwards of 20,000 square feet.
Yeah.
And taking, we've talked countless times about those boxes going into bankruptcy and people bidding on them. And Boot Barn was a part of that. They took down quite a few high profile locations. Yep. Kind of interesting. We had a meeting this morning, speaking of that, with Goodwill. And they successfully bid and won on 2 locations here in Dallas, one in Carrollton and one in Rockwall.
Wow.
And the Rockwall landlord actually sued them to try to get the space back. And they thought that was a prohibited use in the REA. Apparently that was incorrect. And so it was allowable, and they won that in bankruptcy. And so they're doing a store in Rockwall that they're under construction and about to open, very excited about. And so it's kind of neat. I mean, some of these guys, they never would have had a shot at that space in Rockwall. And Big Lots had 28 years of remaining term. So now Goodwill has 28 years of remaining term when you start counting all the options. So it's
I can see that though as a landlord. If you've got a higher end where you feel like a higher end center, Goodwill may not be the brand that you want out there.
Yeah. I will say we spent a bunch of time with him today. It's a fantastic story.
Yeah.
I didn't realize this. This is something I learned. They cycle through all their inventory every 4 weeks.
Really?
So the store should be complete. When inventory comes in, they tag it with a certain color for this week. Well, then they've got 5 different colors on rotation. So by the 5th week, that yellow sticker from 5 weeks ago either needs to sell at a substantial discount or it's going back to the warehouse.
Yeah.
And so they do a really good job of turning all the inventory, keeping the stores clean, employing those with disabilities. And it's a great story to tell.
The story is phenomenal.
Right.
I think, I just see it from the landlord's perspective a little bit. I know why I sued them probably.
That is still the most wild thing in the world to me. Wait a second. You defaulted. Now I get to pay you to cure your default. For a landlord.
Right.
It's wild to me.
Yeah.
Has anyone ever pushed back on that? Like put that in the clause that if you default, I get the rent?
Yeah. Well, in theory, they continue to pay rent throughout their bankruptcy in order to retain possession of that space.
Yeah. They have to.
You have to, because you don't want to go into default. Because now,
but isn't bankruptcy a default?
No,
not filing bankruptcy is not a default.
While you're in bankruptcy, you've got to continue paying rent.
No, I understand that, but typically in a lease, if you become insolvent, it's a default, right? But if you're paying rent, it's a weird situation.
Yeah,
I think so long as you're paying rent.
But it's essentially a sublet then, right? You're profiting off a sublease essentially, right?
Correct.
And so I guess you have the right to sublease it and keep all
those anchor spaces do.
Okay.
Right? I mean, you've got the ability to sublease. Now, I do think we're seeing something now that is unprecedented in our industry, where you have this mass exodus in bankruptcies and people assuming those lease liabilities.
Mm-hmm.
I do think a lot of landlords today are negotiating in their lease that should you go bankrupt, the landlord has the option, not the obligation to control, assume control of that space immediately.
Yeah.
So that is going to be in language going forward. It was not contemplated 5-10 years ago when those leases were being signed.
Got it.
So I do think you're going to see a systematic shift in how, especially anchor spaces, how those leases are written going forward.
Yeah.
It's kind of like COVID language, right?
Yeah.
That was never written into any force majeure language in any leases whatsoever. And you have a generational event come through. And this is a similar situation, just not in the same capacity, but
yeah. I think co-tenancy is more negotiated than what it used to be, where you saw certain tenants require a certain co-tenancy, and then you lose one or two big groups, and then now all of a sudden you can drop your rent 50% or whatever, and you don't have. You go look at sales volume and it hasn't dropped. So landlord's like, "Hey, what are you doing?" But you've got the right, and I think that is something that gets negotiated a lot more heavily today than it used to 10, 15, 20 years. You guys are laughing like this is...
How do we feel about that,
This is something...
Oh, it's an everyday negotiation with us.
You know what? I see it both sides just because I was on the tenant side, and then I work with so many property owners now, and you can definitely see it. Like, part of the reason you're there as a retailer is because of the synergy of all the other tenants.
That's right.
That's why you're paying probably a higher rent than if you're by yourself across the street or down the street or wherever. So you want that synergy that's going to drive sales. As a landlord, I get it too. Like, somebody drops out and your sales haven't fallen, why is the tenant paying lower rent? I don't know what the answer is. But it's all about, I had an old boss. He told me one time, he goes, he who has the most leverage wins. And usually whoever has the most information has the most leverage and wins. So it's like, how bad do you want to be there? And how bad do you want them there?
Hey, Zach, I was just thinking about this when you were going through store sales. Do y'all have like a percentage of rent or percentage of revenue that your rent has to be? Like when you look at a site, like you kind of have an estimate on.
Yeah, we have a pro forma.
Yeah,
that kind of tells us if we think this makes financial sense based on what we think the cell phone sales will be. So my time over at FedEx was black and white. It was they shipped X amount of packages, they sold X amount of copies or whatever it was, right? Yeah. Chipotle, you sell however many bowls or burritos. It's pretty black and white. In the cell phone industry, it's really hard for us to hone in on exactly what the sales is, because you have a monthly subscription, then you have all these add-ons that you can get. And did they do it from that store? Did they activate it from their cell phone, but it went to that store because of a geotag? Yeah. It's really hard for us to pin down exactly what that number is, but we do use a performance, so to speak. Okay. It's just a little watered down because of that aspect of the business.
Yeah. They're selling you a $1,000 cell phone, but they're stretching out the payments over 3 years. Well, what's the real sales on that? Is it the monthly payment for that month, every month for the next 3 years? Or is it that $1,000 device the day that it's sold? Right. And that's what you're accruing. So that was always our pushback on anytime we had a percentage rent conversation. It was like, guys, this is a non-starter. Yeah. Because there's so many different ways you could look at this. Is it the value of that contract that somebody's signing? That's 3 years. Well, that's substantial. That's $100 a month for the next 3 years. Or is it the $100 a month going to credit that store? And what if they activated it? They bought a device, walked out and activated it somewhere else. Where did those sales go? And so it's a system-wide conversation, not a individual store level conversation.
Sales reporting, I don't know what that is. Doesn't exist.
We don't do that. We don't do that.
Yeah, I get that. It's like, why should you get paid more just because I'm doing well, and doing my business? So,
well, half the time you might even just send the phone to their house now, right? And so, that the store that sale didn't really originate at that store.
Exactly.
So,
a couple other headlines close to us. So, Rollertown Beer Works is about to open their $12 million facility in October. They're in Frisco.
Yep.
50,000 square foot venue, includes a tap room, beer garden, and entertainment stage. I didn't realize some of their investors backing him. So Dirk is obviously one of the big ones. Michael Young, Travis Frederick, Torrey Hunter, and Dude Perfect were all the few that were called out here. But they're full steam ahead on that. They're going to keep the Salina location and brew house open, but this Frisco venue will be the flagship. Yeah, I saw a video of it the other day. Looks beautiful. Yeah, it's massive.
Brewery or
brewery. Yeah.
Nice.
I do food too.
Yeah.
Looks great. Cool. So that'll be pretty neat when that gets up and running.
I'll try to book a show there.
Yeah, and hey, that's big for downtown Frisco as well.
Yeah.
I think they're going to pull in a ton of traffic. I think that'll be a major destination as Frisco kind of launches downtown. That all of the construction on Main Street in downtown has been brutal for some of those guys. Randy's Steakhouse just had an article the other day. I
saw that article.
He's trying to hang on, essentially. And
down 60% or something around that.
And he'd been open since 92, 91, something.
Wow.
So
sad story, man.
Yeah. I would imagine he's gotten busier since that article came out. That was a staple. We used to go there on a regular basis before Frisco had restaurants.
Right.
And now I think you add in the competition that he's seen come in, and now you add in the road construction and the inability to access that site, and that's a recipe for disaster.
Yeah. Ugh. That sucks for him.
Yeah.
I hope go everyone go eat a meal there.
That's right. Randy's Steakhouse, Main Street, Frisco. But regardless, that construction gets finished, Main Street gets done, you get Rollertown coming in, you've got obviously the soccer stadium is being redone. There's a ton of good stuff going on down there. Yeah. It'll get better. So, Paper City released their top pizza restaurants in Dallas. So
Here we go.
Oh boy,
I'm ready.
You've been waiting on this one?
Yeah.
So, top pizza restaurants. So, number one on their list is close to my heart. It's a client of ours, Cane Rosso.
Yep.
So,
they're number one.
They do not have them in order.
Oh, okay.
It's number one on their list. So I'm going to call it number one. It's definitely number one in our heart.
Yes.
How about that?
Yes.
So Cane Rosso is on there. You've got Cinzo's Pizza and Deli in Oak Cliff, which is shown on there as their number two. DeLuca down in Design District, down on Oak Lawn is there. I have not been there, but the photos look fantastic.
For DeLuca?
For DeLuca. Okay. Yeah. Actually, they all do. I might have to get a pizza on the way home from here. But you've got Enzo's in Bishop Arts.
Okay.
Is right there. Greenville Avenue Pizza Company, obviously on Greenville Avenue. Very impressive. You've got Louie's on Knox Henderson. That's kind of your old, bar with bar pizza. Been open since, I think, the 80s. It was on the Diners, Drive-Ins, and Dives in 2009.
Okay.
So no super cool looking place. Mr. 01 on Oak Lawn was featured here. I think they are not local. They're out of Miami, but they've done a great job and I think they've got 3 open in and around Dallas. You've got Ovilia's Pizza and Wine, multiple locations. The one they feature here is on Mockingbird. That looks impressive. And then from there, you've got Pie Tap.
Yeah.
Obviously has multiple locations, including the one on Henderson. You've got one in Plano, Design District. Pizzana on Knox Street I think they only have one of those. And then you have Thunderbird Pies, which is also a Cane Rosso concept. Little different style pizza. That's more of their Detroit style.
Okay.
And
where's that?
So it's a square, thicker crust.
Where are they?
Yeah, so they've got that one on Gaston.
Okay.
There in Lakewood.
Yeah.
Yeah, so actually same center as their Cane Rosso.
Yeah.
So they've got 2 pizza concepts in the same strip, but different type of pizza.
Yeah.
And then you've got Zalat down on Fitzhugh. Does very well. And that's their list of top pizza places. So
here we go. The peanut gallery is going to be coming out at you, Ron. Why didn't you say this one?
Man, that I've gotten more comments on that barbecue list that we ran through.
Yeah,
I think we're up to 1 million views on that short clip, and I've had people reach out to me, and I mean it is a hot discussion.
I love how people like comment on there like you made the list.
Oh my god, I'm just reading. I'm reading the report, man. You don't kill the messenger.
This list isn't any good because it didn't include this person. Okay.
Yeah, sure. Sounds good.
Call Texas Monthly.
Yeah.
That's right. This one was Paper City.
Yeah.
So, very impressive. We've got, we'll touch real quick on just kind of market overview of Dallas. We've had a ton of activity here locally. I think, I was telling somebody the other day, it feels like restaurants, banking and service are just continuing to blow and go on the leasing side.
Mm-hmm.
So we had a tour yesterday with a group out of California that's bringing a new concept to market. We had a tour, the week before with a concept that we're growing nationally that is absolutely very aggressive on the QSR front. So a lot of pad deals, it feels like are in the works, and same thing with banks. So, Bank of America has been a client of mine for a decade now, and we sell their old sites, and then we typically lease, new deals. Well, we signed, 3 leases in the last probably 10 days with those guys, and then we ended up selling one at Mockingbird and Abrams that just closed a couple weeks ago. We've got one in Flower Mound that we're getting close to closing. So it feels like the banking, segment has a lot of volume, and then on the service side, we've got everything from health and wellness to medical. Still very, very active on leasing space. And to me personally, it feels like the only thing that has really slowed down is the true traditional retail space, right? Like a lot of, and I think some of that goes back to the tariff conversation. If you're getting a lot of your stuff from overseas, I don't know that, I think it's the uncertainty of what those tariffs are going to look like that's causing the pause and the delay. And that's probably the biggest concern for me, is not actually what the tariffs are. It's just the uncertainty of, hey, we need to know what this is going to be so we can adjust.
Right.
How much of that is the customer picking up? How much of that is the company picking up? And how do we move that forward? So I think anytime you have that uncertainty in the market, we've talked about that before, you've got a delay. And I feel like we're experiencing that a little bit on the retail side, but the restaurants and the banking and the service, it's still full steam ahead.
Yeah. I think kind of similar to that, I read something, and I think the headline was that bank profits climb, but lenders remain cautious about CRE. And to that point of just kind of the uncertainty of what's going on with rates, what's going on with tariffs, what's going on with these things that are kind of outside their control. And so people kind of take a wait and see approach. And so, it's just kind of a really weird time. But to your point about DFW, we had a meeting with a potential client, and they were just talking about how much, I think they've developed 1 million square feet or so over the last 20, 30 years, but they're just talking about all the activity, and they've got well above that projected for the next 2 to 3 years. So there's a lot of positives, a lot of new growth, a lot of new development, a lot of interest, like you're talking about from restaurants and other groups. But, just this uncertainty that we've got to get past. And I think things will really pick up steam and get going, once that happens.
Zach, what do you see? You've got obviously a much larger territory than what most of us touch on a daily basis. What do you see in Dallas as compared to other markets that you work in terms of activity, leasing rates, volume, that kind of thing?
Yeah, I think everybody knows Dallas-Fort Worth is a extremely resilient market compared to some of these other ones. So I mentioned my territory kind of spans from Arizona and it used to span to like Mississippi and Alabama. Arizona is blowing and going just as hot as Dallas is. I don't think that's a shock to anybody. But some of these other, I don't want to call them secondary states, but just markets that aren't quite as populous as Dallas-Fort Worth, Kansas, Missouri, those kind of places, things are a little bit slower. It feels a little easier to kind of achieve at least the goals that I needed to for T-Mobile in those markets versus you jump into Dallas-Fort Worth, you jump into Phoenix, Tucson, whatever it may be. Mm-hmm. I'm battling with other folks, right. Even other restaurants. And I don't think I've had to put on my T-Mobile salesman hat all that much up until maybe about 12 months ago. It started to get very, very competitive on why we should choose T-Mobile versus another concept or a cell phone carrier for that kind of thing. I was in Austin 2 weeks ago doing that exact same thing. So I'll probably be in Phoenix doing the exact same thing too, which is something that is not new to our industry, but it's just new for us in the current swing of things that we're in. But man, Dallas is strong.
So I've got a stat that'll blow your mind. So we just put together a broker list of all DFW retail brokers. This is everything from kind of analysts that are in training to senior level folks. Give me a guess. How many folks
is this JLL or is
no,
this
sorry, this is
DFW wide.
DFW wide.
Got it.
All companies but retail centric only, but all levels of experience. Give me a number. What do we think?
3,500.
Ooh, yeah, that's too big. All right, let's go lower. Too high. Let's go lower.
$1, Bob.
That's right. Rob Franks is the only one in Dallas. Please call him for all transactions moving forward.
Man, I
love that. Number one in Zach's heart over here.
Like 1,200.
All right. Well, go on.
I don't even want to guess.
Yeah. So 597. Okay. So what's on this list? That to me seemed like a very, very large number. So I was out in Phoenix last week.
You threw us when you threw all the analysts in there.
Yeah. Well, yeah. Now this is not support staff. These are these are kind of brokers. Okay.
How many real deal makers are in that number?
That's a great question. But
just one I know of, Rob.
There you go. I love
let's
it.
Go to the top 10.
Two, Bob.
Let's go to the top 10.
Yeah, that's right. We don't have volumes on here, but it's amazing. I mean, some of these smaller, local shops in town. I'm looking at one right now. They've got 26 brokers listed on there. And so it's just are
they a retail-driven shop?
Retail-driven shop.
Boutique brokerage, is that?
Yeah.
Interesting.
And so I was out in Phoenix and talking to a good buddy of mine, Reagan Amato, out there, and he's our JLL guy. And I said, hey, how many do you think in Dallas? He's like, oh, probably 120. I said, no, we're 600. And he's like, man, we probably have 70 guys, in total in the entire market.
Wow.
And I was just thinking that's outrageous. And I would love to see a way to break that down for industrial and office as well, just by comparison. But I thought that was an interesting stat.
The only reason I shot so high is because I ripped a list from some other brokerage one time that had their email blast list. And it had like 2,500 people in there, but I think it kind of had all asset classes on it now. I think about it, because I remember some guys looking, there's like, that guy's like an office broker, So, but I say this a lot, and I just go back to it. DFW is the NFL of brokerage.
100%.
Like, you better be ready to compete. Me and Rich Young have been having a real deep conversation the past couple of days about, like, who's really your clients. And I say you don't have clients You have people you've done business with.
Right.
And to that point, you probably get called on all the time, right?
All the time.
All the time, right? He's your client. I get that,
Sure.
right? But my point is, someone's always calling on those people.
Totally.
And in the whole world of don't call on the entitlement to think that you own somebody because you did a deal with them.
Right.
If everybody tried to honor some code, if I don't call on that, you would have nothing to call on in Dallas.
Yeah.
And man, in Dallas, bro, you better strap your fucking helmet on and put the chin strap on, bro, because when it gets down to it, man, like
Sure.
there's a lot of dudes out there trying to make it.
100%.
So it's interesting to hear that, to think, there's that many people, just in that asset class.
Yeah, just in one business line. That's what's impressive to me is, you could think about that with, if you start spreading it out, hey, I get it. But all of a sudden, just retail. And I bet office and industrial are bigger numbers, right?
Yeah.
There might be 1,000 in industrial. And that's a lot of mouths to feed when you start adding that up. And we've got more volume than I think anybody else, but I do feel like it's spread out more.
Well, the tougher part too, then it becomes to differentiate yourself as a broker, right? Because when you start, I'm watching, my nephew just started. And, I was like, hey, here's like 1,200 buildings I want to buy. I would buy, these all meet the criteria. And he's calling these people and he's like, man, I feel like these people have just been pounded to death. But they're, so then you're just another guy calling every time. So it's, you better find a way to differentiate yourself.
Yeah.
That's right. You gotta figure out some leverage. How do you differentiate? How do you bring some value to the conversation? We tell our young guys all the time, it's like, you need to have something of value you're bringing to that conversation when somebody picks up the phone, or else you just sound like everybody else.
Yeah.
And you have to really stand out and differentiate yourself.
Yeah.
Well, and I think that another key is delivering value constantly at a very high level, right? And in anything we present to a client, it should be, very well done, curated.
Right.
And I think we all run 100 miles an hour, and it's easy to get distracted. I don't want to say lazy, easy to get distracted. And you're sending stuff in a very nonchalant fashion.
Yeah.
That maybe that client is not 100% sold on you yet, or maybe they're having doubts about this or that, and they should never have in their head hey, is this guy really focused on what I'm trying to do or how I'm going to deliver this? And ultimately, their goals are our goals, right? And so making sure that we're top of mind, we're adding value, we're constantly touching base. And how many times have we transacted with somebody and then you don't talk to them again for another 6, 12 months?
Mm-hmm.
And that's where the opportunity for somebody else to enter the equation arises. And we're all, myself included, we're guilty of that.
Well, I think the other issue is that becomes where, when it's a client, like y'all probably talk all the time because y'all are doing so many transactions, right? And you get so many deals rolling. But someone that's a lower frequency of transaction, which is kind of more the industrial world, right?
Sure.
Like, you might do one deal in your career with somebody in an industrial deal.
Right.
But I almost feel like my clients, when I go see them 6, 12 months later, they're like, where you been? I'm like, what, did you have a need?
Did you need me?
No, I just haven't seen you. I'm like, we did it. Like, it's over. But I almost feel like you almost have to keep on top of your clients larger.
100%.
And so it was interesting. Me and Rich started having this discussion, and he was just in a situation, and I gave him my opinion on it. And I was like, to my point, I think it's the NFL. Like,
Right.
The next day I went and saw a client of mine, been a client of mine forever, like they put the shutters in my house. They're a shutter company. They put my shutters in my house, like at cost, like just great friend, like had a pretty decent relationship with these people.
Yeah.
Went and saw them a couple months ago. About a year ago, they needed to work on doing a sublease. They're like, hey, our space is way too big now. And then I went and saw them while the tariffs hitting because they import a lot of stuff. And they're like, tariffs this. I was like, they're like, hey, we're probably going to downsize. I was like, okay, cool. You're not up until, early next year. So like, let's go. If you're downsizing, you're probably, you're too soon to be looking at something yet. Yeah, I know. Okay, check back in a couple months. So I had my thing set and I sent him an email. Hey, we're getting on the cusp of like, we got to start doing something. Hey, so, we just leased a building. So thank you for all the help throughout all the years. And I was just like, I just forwarded to Rich. I go, I wasn't even mad about this. I go, because I don't know, I was on top of it, but like, maybe not enough.
Yeah.
Right. Obviously not enough. Right?
Yeah.
Like, I went to the cadence that I thought was applicable.
And what they told you.
Yeah.
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 So
was that an industrial deal?
Yeah, it was an industrial deal. Yeah. So
and Rich ended up with it?
No, he might have.
Didn't you just tell me you did an industrial deal like not too long ago?
No.
Was it his?
I don't think so. Yeah.
So I was just like, oh, there you go, man. Like, you just don't own these things. Like, you have to nurture it forever if you want to keep it.
That's right.
That's why it's a grind. Like, you got to stay on it. You got to grind on it daily. Yeah. And some of it's just a timing. Like, you're doing all the right things and you're even following what the client's telling you. And it's still not enough because somebody got in there just the right time.
We call it real estate day.
Yeah.
They showed up on real estate day.
That's right.
It's like, oh, here you go. Yeah. I mean, it always happened to me. Like, there'd be some new kid getting the business and I'd been calling on some guy for, 7 years.
Yeah.
Nothing ever happened. And then some new kid calls me to tour my listing and he shows up with that guy. And I'm like,
why do I feel like you're talking about Chase Miller right now?
Oh, Chase Miller. I love old Chase. I told him, I go, man, your timing was impeccable. I really phased out of brokerage and you just stepped right in and took all my shit over.
He's a pit bull, man.
Oh, he's great, man.
Yeah.
He's
Kudos
awesome.
to Chase.
So he's a a blast to work with. So, but yeah, no, it's that many brokers. That just tells you, man, like there's that many dudes gunning for your position.
That's right.
So
you can't rest.
No
rest.
No.
You better buy a lot of assets if you want.
Yeah. You better find a different path.
Yeah.
Hey, you know what? And that's what. But like to a degree, like that's what I went and did. I went and bought a bunch of assets.
Yeah.
Well, I kind of traded the opportunity to do those brokerage deals because they see that they're like, oh, you're buying a bunch of stuff now, so like I'm not that important to you anymore.
Right.
No, I'll still work on it. No. They'll make those decisions for you, which you can't do it all, man. So
that's right.
Pick your poison. So
good stuff.
Well, that's all I got.
I think we got it, man. That was
nice.
fun.
It was good. It
was fun.
Thanks, Zach.
Yeah, thanks for having me.
Appreciate you joining,
thanks for coming in, man.
It was a blast.
So,
awesome.
All right. Well, I'm excited for the next restaurant showdown.